Welcome everyone to the twochimps.net 5-minute trading tips. I'm Jake Bernstein.
And I'm Elliott Bernstein.
And we're here today to tell you about momentum and momentum divergence, a very important concept in trading.
Divergence is defined as a deviation in trends. So when the trend of prices is moving higher and a divergence indicator like momentum is moving lower, that's often a precursor to a market top. Conversely, when price is moving lower and momentum is moving higher, it suggests accumulation and frequently precedes bottom. The good news about divergence is that it works. It's a very powerful concept. But the bad news is that most people don't know how to use it, and that's because they don't know how to quantify it. You can look at a chart and see divergence, but that's not enough for us. We use specific rules to identify divergence. Now Jake is going to show you a chart with a typical divergence pattern on it.
Take a look at the chart. This happens to be a daily chart of Freeport-McMoRan. Observe. We made a new low in price right over here. Let's call that point A. At the same time, our momentum indicator, momentum close 28, did not make a new low. So if we identify these points, A, B, move to the left and find the lowest momentum previous to point B, and that would be point C. I'm going to mark point C for you right over here. Now, many of you may be familiar with this as my power momentum formula. It's extremely effective, but let's just continue. Hold on a second here. I'm going to mark that point. So we now have 4 points, A, B, C, and D. The algorithm is very simple. If price A is lower than price D, while momentum B is higher than momentum C, you have a bullish divergence. We now need a trigger. The trigger is defined as penetration on a closing basis of the highest momentum during the period of divergence. So I will get another tool and mark this for you. Just bear with me for a moment. And you can see the paradigm here. You can see what's happening. You're making lower lows in price, but you're not moving lower in momentum. And that represents a form of accumulation, which is typical prior to market bottoms. So looking at triggers, the stock triggered right over here on this day, 1 day after the low. And that's not so bad. We'll see if there's follow through. So far there hasn't been. But there are other aspects to momentum. The most important thing that we wanted to show you today is divergence. Let's take a look at another chart. This is CyberArk, one of my favorite trading stocks because it's so big in terms of its movements. Let's go back in time, and remember we're looking at a daily chart now. We go back in time, like so, and ask the question, was there bearish divergence at the high? So let's take a look. We're going to remove some of the annotations here from this chart, so just bear with me for a moment. Okay, and so you're seeing the real stuff here, complete with fumbling and all, which is the way we like to do things, so that you learn from our mistakes. We're going to delete all the annotations, like so. And so now let's take a look. Going back in time, assuming that we're back here, and remember this is really not 20/20 hindsight. If you practice divergence, you'll become successful with it. We know that we're making a new high in price at this point over here, so we're going to call this point A. At the same time, point B momentum was not making a new high. Go back to your left, find momentum, the highest one during this period of time, and that would be approximately right here, and we mark it. We now have 4 points. Do we have 4 points? Yes, we do. A, B, C, and D. In this case, the model is the opposite. A is higher than D, while B is lower than C. So that's A, B, C, and D. Conversely, our momentum sell point would trigger under the lowest momentum low during the period of divergence. That's a very simple explanation of how it works. We're going to show you one more, and that is crude oil. Recently, of course, there's been a very big move in crude oil, and people are wondering, was there any tip-off that this was going to happen? For us, the tip-off was momentum. Let me show you the chart. You can see how this chart looks so similar to what we looked at in Freeport-McMoRan. New low in price, right over here. So we're going to call it point A and B. Lowest momentum, right over here. C and D. and of course the trigger point right over here, which led to an immense rally. And even though it may look small on the chart, this is a rally worth about $8,000 in a matter of days. I'm going to turn over to Elliott now.
For the purposes of measuring divergence, we use the momentum indicator set as a 28 bar of the close, or MACD 9 and 18. Those are the indicators you can see on Jake's charts. As we presented it today, the divergence method, what we call power momentum formula, also requires a trigger and a follow-through. We'll show those in future episodes of 5-Minute Trading Tips.